protocol just so you can have it for later.
Okay.
But man, just really excited to have you. I don't know if you got a chance to make sure you had all the ins and the outs on the pro formas, the spreadsheets. You had access obviously to the school.
Hmm.
Um, so give me kind of out of the gate thoughts or questions. I want to share my screen here in a minute just to like walk through everything, but I want
Hmm.
to get some initial feedback and questions that you had on your mind.
Yeah, I think that just right now, I think my thought processes right now is kind of like how you say in your material. I want to make sure I like get my team together, make sure I have a good foundation to kind of launch off of. And then also I know that just may if we're thinking of questions, I know that something that was on my mind was I wanted to kind of pick your brain a little bit more on the life insurance side, like the whole leveraging an account for potential down payment. I have been educating myself on life insurance a little bit more, but I think that I'm more curious and interested in the opportunity to where you can leverage a death benefit. I'm not starting out a death benefit, but maybe a cash benefit.
Yep.
And yeah, just looking at that type of avenue. But yeah, that and just soaking everything up and just making sure that I can get a good foundation to kind of to start from in terms of a team.
Tell me what we can go over both of those.
Uh-huh.
Let's start on the initial like the life insurance idea. So I
Uh-huh.
do this myself. I can show you all of our stuff. I'm curious to know what homework you've done, what you've studied a little bit, because
Uh
we've got quite a few people in our group that use this as well. So it's like a great coupler.
uh-huh.
It's like it just like maximizes returns like up to the tens. It's pretty cool. So
For
what
sure.
have you done and what have you studied and everything? I want to make sure I'm on the same page as you.
I think that my understanding of it at this point um is just having that how do I put it, like having that access to the money, but I'm not necessarily spending it. I'm just leveraging it in a form of a loan. I know that, so my own knowledge is just my is how much I've done, is how much I've worked with it in my own scenarios. And like one of my scenarios was I got a loan off my IUL that I started 2 years ago. It didn't have much of a cash benefit. I was only paying 750 a month. I want to say the cash benefit at the time was just over 10 or just over or under 10 grand. And I want to say I just at the time I got a loan on it just to kind of see what's the process like. So I put a loan for 6 grand out. And in my mind, I guess I'm wondering, like, okay, so let's say I have 100 grand in cash. Like, what policies would allow me to fully fund that in order to have access to that capital, but not in in the liquid form? And bear with me because I'm still learning for
Yeah, awesome.
sure.
Awesome. Awesome.
Still, yeah, just very beginning stages of learning, but I'm just thinking like what access will, because would I have to fund a policy for years to have access to that type of liquid if I have it in cash, but I don't necessarily want to use cash? So I guess that is the next avenue of how I was looking to educate myself, was what policies would allow me to do something like that. Because I know, for example, my IUL I can't use because the cash value at this point is probably like 6 grand or so. So um yeah, that's where I'm phased into learning different type of avenues that people can use those as leverage.
Man, 100%. And so I got to tip my cap. That's awesome that you're already thinking about that. That's kind of like I would say that's kind
Thanks.
of like the next kind of level up. Like everyone's like, hey, how do I get the investment? How do I buy the deal? Right. But what a
Hmm.
lot of people don't consider is that our dry powder has to sit somewhere. It's gotta, if we're gonna deploy money into something, we gotta pull it from somewhere. And so I'm
Hmm.
trying to take a step further and say, okay, we'll buy these commercial properties, but when we have to deploy capital, let's pull it from a policy loan from these life insurance policies, because now you've got your money still compounding in the policy tax free, all the while you've got the insurance company's money in the deal deployed, which now you're
Hmm.
making your dollar work twice as hard. So what I do for people in your shoes, I do the same thing. I've got my license in 49 states. I don't have my license in
Hell
Alaska
yeah,
just because I don't have a client in Alaska yet. So,
for sure, for sure. I
um,
know that's right.
but what we can do on the life insurance side, what I kind of suggest is, I mean, it sounds like you're already kind of like step 2.0 already, but what I suggest is after you've, discovered kind of this idea, which you already have, I suggest us requesting a health rating, which doesn't bind it, doesn't cost anything. But
Mhm.
before we can kind of step back and look at all the numbers and everything like that. But what I try and show people is exactly how I use my own policies. Whenever I have an opportunity, I take a policy loan. I just started another one. So I've got 5 policies now and
Nice.
put money into them. Whenever we got dry powder, we just put money into it. Whenever there's an opportunity, we take a policy loan. And
That's really cool because I guess I didn't think to that level. Like I have a policy, but of course, like why wouldn't I just have more policies? Like why would I not? So I'm still, changing my mindset because I'm just like, oh, I have a policy now. And
yeah,
yeah, but it's like, no, you can continue to keep leveraging. So I like that idea.
well, you'll keep leveraging in the because with the IRS, they kind of put some guidelines around it. It's like in your first policy, once you set kind of the parameters, even if you hit the lottery, you couldn't put any more money into that one policy. There's like guidelines and boxes around it. So
Hmm.
what you'll do, and I'm sure this will happen for you, as it has happened for me, is I've started my first policy where I could start. We bought some more property and the cash flow came in. You're like, oh, great. We've got this dry powder. Where should we put it? Well, we've already stuffed our first policy as much as we can up to the brim. All right, let's start policy number 2. So we just put a little bit more in that one. We put a little bit more in the next one. And now I've got one on my, I guess 17 months old now. On my 17-month old, we're going to put one on my 1 month old here soon. Once she gets past, I think it's 3 months.
Okay.
Put all of our money
Okay.
in.
Makes a lot of sense.
It's tax free. It's guaranteed. Nobody can touch it. It's completely litigation protected. I mean, nobody can get their hands on it. Nobody knows about it. It's completely private.
And the thing about that is, so in that event, are you you're leveraging the death benefit, right? Or
To
the
an
cash
extent.
benefit?
To an extent. So think about it. Think about it in this standpoint. Think about it from the house that you live in. When you went and bought this house, let's say it's worth $1 million, and you guys put $100,000 down. You put 10% down, whatever it is. So that's your equity. That's an equity is just ownership, right? So you
Hmm.
10% of ownership in that property. Every single month that you make a mortgage payment of principal and interest, you build more equity in that house, right?
Hmm.
Well, whenever you have this opportunity, let's say you and your wife want to go and fix the bathroom up or something, or redo the kitchen or whatever's on your mind, right? You can take a home equity line of credit against the value of your home. Okay. So you take a loan against the house to go fix the bathroom up. I would ask you, if you go and take a loan against your home, like a HELOC, does that decrease the appreciation of the home? Does that affect the appreciation?
Absolutely not. No. Hell no. Better
It,
not.
it shouldn't, right? I mean,
Right.
the house, whether the house is in a cul-de-sac of a million homes with worth $1 million, the house doesn't know. It doesn't know if it's leveraged against it or not. It doesn't know if there's like a loan against it. It's
Hmm.
going to appreciate in value because that's what it's going to do. The life
Hmm.
insurance idea is literally identical because what you do is you put money into a policy, the same way you put a down payment on a home, put a down payment, or you just put money and deposit it into a policy. The death benefit is like the value of the house. That's the asset.
Hmm.
So when you've got this money in this policy, you can borrow against it and it never affects the appreciation of the home. It just continues to compound and grow. And it has nothing to do with the market. It has everything to do with the contractual guarantee. And there's no
Hmm.
taxes. So you control this line of credit versus when you borrow from the bank for a HELOC, they control the interest rate, they control the amortization, they make you put your firstborn up for collateral, like all the rules that comes in when borrowing from a bank. So we
Hmm.
try and basically just get rid of the banking system and use, these life insurance policies kind of like at the UMB level. Does that kind of
Hmm.
correlation make sense?
Oh, I see exactly, 100%. And I that was my question because I know like I had an IUL and I had it for let's say 2 years, and like I said, 750 a month. My cash benefit was just maybe around 10 grand. So I'm thinking like I need a lot more than 10 grand to go in on this deal. So like, what type of policies are out there where I can fund it, a little bit more, or I'm thinking no, I'm not gonna wait 2 years to do this again. So like, what type of avenues are people out there using like to leverage life insurance? That's why I was wondering like, wait, are they leveraging death benefit now? Or what? So
So
I
yeah,
guess yeah, in a sense, ultimately, yes, you are.
man, you're right on it, man. And I mean, honestly, just I tip my cap to you, like you're on it, man. It's
Thanks, man.
you've done your homework. Seriously, that's great news. I mean, so we now again, I'm not knocking your IUL. I do not, I would not sell a IUL to my worst enemy, to be honest with you. Now, that's not
Hmm.
a knock on you as an individual. The reason
Hmm.
why that is because without getting into the weeds of the life insurance aspect of it, we use only, I use only whole life insurance. The main reason why that is really the only reason why is because the longer that you own it, the longer you own a policy, the cheaper it gets. There's no other product that's in insurance where it gets cheaper. Think about it. If you had a 1 year term policy for $1 million today, how old are you, Martin?
I'm 29.
29. Okay. Shit, that's awesome. Damn. So 29 years old, $1 million term policy for you would probably be like $500, right?
Hmm.
Next year, when you go, let's say it's a revolving term policy, you're now 30 years old. That term policy, because now you're 1 year closer to graduating into the next life, it's going to go from $500 to maybe 550 a month.
Hmm.
Just because you're so it got more expensive because you were a higher risk of
Right.
dying, right? It's just inevitable. So what happens is this is again maybe more than you care to know. I don't know, but I'm just trying to educate.
No, no, of course, I appreciate it.
Yeah, when you with whole life, we've discovered a way to basically front load the entire cost of the insurance into the very first year. And it's still not very much, but you got to put some cost to keep it tax free. After
Hmm.
that, it literally grows compound tax free for the rest of your life. There's no more cost. Like the money,
Hmm.
you have more money than you put into it. Where IULs, term insurance, VULs, all these are variable products. There's they can say it's tied to the market and you get this upside and the floor is zero, all these kind of, not salesy gimmicks, but when you put money into those things, you have a 1 year revolving term policy in these things. And so the next year you're going to turn 30 and that cost of insurance is going to go up. It's not going to be by much.
Hmm.
You're healthy, but it's going to go up. What do you think happens to the cost of insurance when you're like 72 years old? Now that's way down the way, right? That's way down.
Hmm.
But it's like you might have $2 million in cash in this thing. And you're like, hell yeah, this is great. But the problem is that you have to have the market outpace your cost of insurance. So if you put $2 million, you have $2 million in cash value in this policy, and you're 72, that $5 million of death benefit, which is going to about be what it is, that cost is going to cost you like 80 grand. It's going to cost you like $80,000. And then the next year, it's going to cost you like 95 grand because you're going to be 73. So what ends up happening is the cost of the insurance ends up cannibalizing the cash value. Because unless you want to just write a check for that cost of insurance, it's going to come from the cash value. So then you're like 85 years old and the cost of insurance is $190,000. You don't have the capital in your checking account to write that check. So they take it from your cash value. There's nothing left.
Hmm.
And then you lose the death benefit and all the cash value. And it's like right before you die, basically. There's never been
Hmm.
an IUL that when they project you something, it actually ends up doing what it's going to do. So that's the horse
Hmm.
I die on. But that's why we use whole life. It's the only product where you can say, hey, I can not predict, but I know exactly where I'll be when I'm 92 years old, down to the dime where my money will be. So we use whole life to.
And I will say to that too, I appreciate the education really quick that I Can you hear me?
Hmm. Yep.
Hello?
Yes, I'm good.
Okay, okay. No, I was just gonna say, let me close the door. I got a screaming baby back there.
Uh-oh.
Uh, I was just saying that, I did just I did just open two new whole life policies for my wife and I,
Nice.
that I funded each about $3,500. And that was as of like 2 weeks ago. But
Wow.
that was just because that's the next plan. Was one of my business partners is a financial advisor, and that's kind of what he
Oh,
advised
that's right. We
was,
talked about that. That's right. That's right.
yeah, yeah. He kind of put me on a plan that was basically lowering my funding to my IUL and kind of increasing a funding to two whole life policies for myself and my wife. But yeah, I mean, I'm interested to learn more about that, how that goes. But I'm just saying, just for the sake of what we're talking about, like I just started the whole life like just recently.
Cool.
So yeah, I would like to think that maybe I can use those as a leverage in the future as well, once I lock up a contract or so. So
We can
yeah, I'm
talk
just
more about
interested in
that.
learning.
Yeah, we can go over that kind of stuff, down the road. When you start doing these deals like this and you need more capital to park somewhere, we can go over, the next. I love the opportunity to work with you for that down the road.
For
Cool.
sure. Yeah, for sure. I
Well,
definitely need to go that avenue.
yeah. Well, let's switch gears here just so we can be, efficient with our time, and I don't want to waste your time here. But did
Okay.
you I want to make sure that you had the opportunity just to see all these things, right? Did you get a chance? Did you get your own pro forma like this?
Get when you say get my own, what do you mean? I know I went through the one that was on the Excel sheet that I got access to. When you
Okay.
mean get my own, what do you mean like
Meaning, well, and that's what I was texting about. So I know you have that iCloud account. If you had a
uh-huh.
Gmail, I can actually like transfer ownership over to you, which is really what I'd like to.
Okay.
I like it to where I can make a copy of my pro forma like this, and you
Uh-huh.
just become the owner of your own. And that's, even if it's like just one
Okay.
email, but yeah.
I want to say I can access it from how I did. When I pulled it up, I was able to go through it, clicking the cells and
Okay.
everything. Uh, but if not, I gotta go into. I know I made a Gmail years ago, and it's something I don't ever use, but I can probably just get in there on and just kind of start, shuffling around. But again, I really feel like, or at least when I first looked at this, that I thought that
Okay.
was I had access.
Okay, cool. Just making sure. That's good.
Hmm.
Um, But one thing that I wanted to mention too on this is okay, and then so we got this, we had this, you got a chance, obviously, to introduce yourself. That was awesome on here. Did you have any other kind of questions or thoughts like when you got into the classrooms section over here? I'm updating this
Uh-huh.
here. So this is I'm gonna make this by February 1st. I'm gonna have like a little CRE Collective 2.0 where I'm going to have a bunch of
Okay.
different modules on here going over, hey, these are all the underwriting metrics. This is exactly how to do it. This is how the conversation and the dialogue goes with the seller. Hey, this is
Hmm.
what you talk about when you're underwriting, like all the things that I do when I'm going from start to finish on a deal. I'm going to have these in its own module so you can go back and review them, if and when you need them to. So, but
Hmm.
but also too, you can download. Did you happen to download school on your phone as well?
Yeah. Yep. I did.
Cool, cool. All right, well, good deal. Yeah. So, and then you have access to the CRE mastermind, like the Google Drive.
Yes. Yep. I did.
Okay, awesome. Yeah, I just wanted to make sure that's kind of where I wanted to be today. Is of
Okay.
course just make sure you had access to everything, you got into everything, but most importantly, just kind of go over questions or thoughts that you had because we're having our next call tomorrow night, and I'm actually
Right.
getting my leasing agent on there who leases up all my buildings, so you can like ask him
Nice.
questions. We're going to go over some properties that him and I have done together. The psychology behind leasing real estate, how he underwrites and vets these tenants, like just going over, and then of course opening it up for questions to anybody and everybody. So
Hell yeah.
I'm excited. We're gonna have like this
Me
show
too.
gonna have
That's good.
attorneys. I'm gonna have my bankers on here talking about how they underwrite commercial real estate, how they go and vet you as a borrower, how they vet the lease, like just all these things that I just don't think really is anywhere else. So I'm hoping that I can kind of get you like into the trenches of exactly how to do these deals. And hopefully, like I'm a baseball guy, but it's like get you to where you're standing up on second base ready to score on a deal without having to be up at the plate and battling. Like I can hopefully, with all of this information, get you, way leg up on stuff versus kind of starting where I did. You know what I mean?
For sure. And I appreciate that. Yeah, no, I'm excited for that for sure. Yeah, that's gonna be awesome. I'm ready to just soak it all up.
Yeah, so I mean, we're ready to have you, and it's going to be great. And I think one of the coolest parts about this too, man, is like we don't have a huge group right now. It's only there's 24 people in this group, and I think what makes that so cool is like, we've been texting on our cell phone. We're doing this call live. Like I want to make sure that you realize or that I'm your biggest fan. Like I want to be your teammate. I want to help you any way that I can. And everybody in this group is also, they've all paid the tuition to be a part of this too. So you've got action takers, people that are specifically focused on industrial real estate. So you've got like a really good group of people. When you have an opportunity or you got a question, you just pop it on here and you're going to get like 8 people that are going to respond. You know what I mean? So
Mhm.
I just think that's a lot of fun when everybody's on the same page and we're a part of something bigger than ourselves. And it's just going to allow us to hopefully do more deals faster and quicker. You know what I mean?
Mhm.
So,
Mhm. For
but,
sure.
so what questions or thoughts do you have? I just want to make sure that you kind of have everything before we go into our live call tomorrow night. And, just be on the same page as you, man. Just let you know I'm an open book.
For sure. No, yeah, I think just what I was thinking in terms of life insurance, but it is important for me to just kind of not jump to level 7 right now. Let me just stay at level 1. Let me get proficient with level 1, level 2. But I know that that is an avenue, and like you just reassure me that that is for sure, an avenue that we can go down once we get a contract lined up is, leveraging that account. But yeah, I'm interested in just hearing testimonies from people who have done it already, saying this is what I did and how I did it, and and it's my objective to just go out there and just do the same thing. So I think that, yeah, my main focus is just learning from square one, and just soaking everything up at this point.
I love it. I love it, man. We'll be here again, going back and forth. Anytime that you got a question or thought or whatever, you can just hit me up. Like you got my cell phone and we can just kind of keep this ball rolling. So, most important piece is I would say if you can, listen or watch the first couple of videos that's in that classroom, especially talking about assembling your team, getting the brokers, and we'll go over that some more as kind of time goes on. But that's probably the biggest piece out of the gate is starting to beginning assembling our team, having those conversations with brokers and letting them know the types of buildings and properties that you have interest in purchasing. And so
Hmm.
that would be my biggest focus and homework I would give to you really is, and I say this all the time, but it's like instead of making a call to somebody, you're driving down the road and you see a for lease sign in front of an office building. Instead of calling that guy, Jim Smith, and saying, "Hey, Jim, I have interest in buying commercial real estate." Jim's probably not going to call you back. Like he's, you're not a real estate guy in the voice when you're talking. But instead, if you have the conversation and say something like, "Hey, Jim, I just saw your listing. Hey, my name is Nolan. I just saw your listing over off of 123 Main Street. I'm not really interested in that particular type of space. I am looking for something that's like 20 to 50,000 square feet, 16, 18-foot ceiling heights, and maybe less than a mile off the highway. Do you by chance have anything kind of in your bullpen right now or your pipeline that would fit that criteria?" And you be quiet. within like 15 seconds, you've just established yourself as somebody that's not an idiot, someone that's not a novice, and you've used
Mhm.
vocabulary that speaks. Because if you said that to me, I'd be like, dang, this guy's a dog. He knows what he's talking about. And he's going to say, no, I'm leasing this other building over here on 123 Main. So, like, no problem, no problem. You don't like cut him off, but you interject and say, well, what do you got? And then you be quiet again. He's going to say, well, I do have something that's over here, blah, 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 blah. And then you've got like 2 or 3 leads within like 90 seconds of calling a guy that might be off market and definitely not on LoopNet or Zillow. You know, like you've already got some
Mhm.
lead generation just by using good vocabulary when we're on the phone. You know what I mean?
And naturally, what I'm thinking, so when you're saying that, and and you're right. Thanks for that advice. I literally just heard that again from your TikTok last night when I was
Yes.
watching it.
Awesome.
Uh,
Awesome. Awesome.
but what I naturally think is like,
It works. That's
so,
the reason.
hell
Yeah.
yeah, I
Yeah.
believe it, dude. I know you're not saying something you haven't done yourself, so I appreciate that.
Yeah.
What I'm thinking is like, so would you say that someone getting in, you'd incentivize them to find the deal first before they go to find funding for it necessarily, right? It's just, make sure a deal, you get it, you find something available and it lines up on paper. Then, instead of a backwards thinking is, wait, let me go find funding, and then now I got to find, now let me go try and find a deal. Would you recommend someone just does it the opposite, find the contract first?
I would focus on, so like going back to our little, let's see here, collective. I kind of live and die by this, what we call it, the habit, right? Where assemble, acquire, leverage, and multiply. Like
Hmm.
focus number one on assembling the team, figuring out who your brokers are because they're going to bring you the leads. You got your leasing agent. That guy's going to lease the vacant building if you have a vacant building. You've got your bankers. Those guys are going to fund the deal. You've got your insurance guy. He's going to insure the property, make sure it doesn't burn down. You don't get paid. You got to have your attorney that draws up all the legal documents. You got to have your limited partners if you can't, finance the down payment from the seller. Like if you can focus on assembling this team, your brokers are going to bring the deal because that's how they get paid. You tell them very specifically of what you're looking for. They're going to bring you the deal. And if you spend your time focused on raising capital and having relationships with lenders, that's how you can. And that's how, again, I'm not saying this is the only way, but what I've found success in is I spend all of my time, not all of it. I like to play racquetball sometimes too. But
I
I
hear
spend
you.
the majority of my time with my brokers as they're sending me deals and raising capital with limited partners and funding relationships with bankers because those are the guys that bring the money to the deals. So
Hmm.
for you, if you can create relationships with partners and banks, when your broker brings that deal to you, you've got the funding. Because my younger brother, he's 27 or something, and he just got a building under contract. He's trying to do the commercial real estate thing,
Nice.
and he's got a building under contract. I think it's like, I mean, he's trying to do it right. It's like 15,000 feet or something. He's got a good little deal. But the problem is that he's got this building under contract and he doesn't have any infrastructure. He has no teammates. Like he found this thing on like Facebook, right? He found a building on Facebook, which neither here nor there, whatever. Got it under contract through, 15,000 earnest money or 10,000 earnest money. Problem is, though, he doesn't have an attorney to draw up the docs. He doesn't have a closing agent. He doesn't have a broker to make sure that the purchase agreement is like attorney tight. He doesn't have any bankers that want to fund him the money. So now he's got this timeline when he got the property under contract to when he has to close. And now there's like time decay. So like every day
Hmm.
he's not getting closer to closing the deal, he's that much closer to losing his earnest money versus
Hmm.
having the deal under contract and knowing that you've got all of this time just to basically now find the best terms for the deal. You've already got the money lined up. Now it's just a matter of negotiating a little bit harder on the sales price or the terms with the bank or squeezing more margin out of your limited partner, right? Like there's just,
Hmm.
instead of you scrounging around trying to get everything together, you've already got the pieces of the pie like already on there. You know what I mean?
Okay,
That's how I would suggest it at least.
for sure.
Does that answer your question?
Yeah. Oh, yeah, it does.
Yeah.
Yeah. It's just, yeah. I just need to just basically start putting people in position to be ready for this deal that I'm ready to go find. So
And well, let me
yeah.
show you this too. I don't know if you've looked in here or not, but like this is another kind of cool attribute of being a part of our group is these are all my contacts. Like these are every and these this is in our Google Drive. So
Hell
you
yeah. I did not see this. Yeah.
this is me, of course. These are my brokers. This is my leasing guy. This is my accountant, my attorney, my contractors, my bankers, my insurance guys, like everybody that now maybe not your some bankers because you're out there, but I mean, you've got all of the other people that can make the deal go around. You don't have to go find them yourself. That was like I said before, I hope to get you on second base, without you having
Hmm.
like those players are already here and they can do all that stuff for you. So you can just focus on raising the capital. You know what I mean?
Hell yeah.
Finding the
Hell
deal,
yes.
you know? You
Hell
can
yeah.
focus on doing what you are good at and what's going to make you successful versus having to dance around and draw up some attorney documents.
Hmm.
So
No, love that. And I
good.
guess that answered my next question was thinking, by me being where I'm at geographically, does that play a part in filling these roles? But I mean, I guess it's certainly only on the banking side, which is just funded. Something totally separate in terms of finding the deal and or finding a good deal. So I'm not limited in terms of where I am geographically for putting those type of roles in place for sure. I'm learning
Absolutely not.
exactly.
Though your location is, I mean, I would say that my bankers that I kind of work with where I am, they're more going to say, "Hey, I'm going to only lend on a building that's gonna in Alabama versus going to California." But also too, there's bankers that are local in California too. I mean, what you can do is literally Google, I mean, California banks with less than $1 billion in assets, and up's going to pop a list of 50 banks, and it's going to be San Jose local bank, Community First Bank, or whatever, right?
Hmm.
You said you're in San Jose, right?
No, I'm in Las Vegas.
Damn it. Who was I talking to? My bad. I was thinking you were in
You're good.
California. I'm sorry, my bad, Martin.
No, you're
Uh,
good.
I mean Las Vegas Community Bank, or whatever, right?
Right.
Um, my bad. You know what I meant though.
Yeah, yeah, of course, of course.
So yeah, so if if you're out there in Las Vegas and you type in literally Nevada banks less than $1 billion in assets, Up's going to pop a list and you just give them a call, especially if they're local. I mean, all those banks, they have to make money a certain way too, and it's by lending. So you form that relationship. Oh, let me show you one more thing too that I'm working on
Hmm.
that I should be done with it pretty quickly. I'm not there yet. I like giving myself a timeline. So this is my little proposal for finance. Like when I go and talk to these banks,
Hell yeah.
I never ask them for money. I just like offer them my building as collateral for a mortgage. So, like, this is a building that I just got under contract. It looks doesn't look great right now, which is great because then I can paint it and do all the stuff that I want to it. But what it
Hmm.
has in here, it has the table of contents, all of the summary, all the stuff that goes into it, where I can say, here's the details of this building. This is just kind of, I haven't really built it out yet but I'm creating this template for y'all
I love that. Yeah,
where
man.
you send this to your banker and say, here's where I'm at right now. Here's my personal financial statement. Here's the details of the building. Here's all this stuff. And what's going to happen is, and then not to mention, then you mix in this pro forma and you include that and say, here's how I ran my numbers. This is the deal that I'm doing and I'm offering you this building as collateral to a mortgage. And you submit that proposal for finance to them. I'm telling you, you're going to have banks like dying to lend you money.
I believe you,
I'm
man.
telling you, man, it's crazy. It's crazy. So
That
I'm gonna
is
have that
fucking
finished up
gold.
by the end of this month. I'm gonna have it finished up by the end of this month to where then, like I said, you can have access to all that. So you don't have to do it. It's already made for you. All you have to do is just kind of plug and play. You know what I mean?
But even still, what I'm taking from this is even more so obviously thank you for like that type of material. But what I'm really taking from this is the mindset to go into this because
Yes.
even you changed my mindset just from 5 minutes ago because I was in my head thinking, oh, a smaller bank with under $1 billion assets, like why would they want to fund me? But the question is reversed. Like, it's the scenario is completely reversed. It's like,
Yes.
here's why, they let me show you why you'll want me versus why would you want me, you know? So yeah, so even just that mindset of when you just showing me like this breakdown is already, yeah, you're fucking right. Like,
Let's go.
no,
Let's
like, you
go.
know, like, like I'm gonna show you why this deal, needs to be funded from you. I love that, and
Yeah.
I'm already on that right step because my financial advisor, my partner David, he just gave me a business card to someone at a bank that he used because I don't like. I'm a Chase Bank customer. I hate I don't nothing against Chase. I like Chase versus other big banks, but I don't like big banks. I don't like the whole big bank idea. So like the last year, I've been wanting to get out of that, and with I'm really appreciative of like the relationship I created with my financial advisor because he's helped me seeing like you don't have to be with banks. Like here's a car to this guy. I know he's a guy from a bank I've never heard of, but it's out here in Las Vegas. So that type of approach to the funding is everything, and that I love that. So of course, yeah, thank you for the material, but yeah, like that type of mindset is definitely what's going to get, me over the next guy for sure. I would like to think if I were to present them with something like that.
Dude, not to mention too, like you said, like you need them for deals, but they need you. Like you are the
Mhm.
asset to them. You know what I mean? Like
Mhm.
they my biggest thing that I say to people is like, banks are conservative by nature, risk taker, real estate investors like you and I, we're risk takers by choice. Like the banks they're not in the business of buying real estate. We are. And so we're the
Mhm.
risk takers. We're the ones out there trying to drive a profit. The banks just want to make sure that their money is safe. And if you
Mhm.
can provide them a safe investment, a safe haven for their money, not only are they going to lend you money, they're going to start buying you beers, they're going to start buying you dinner. It's
Hell yeah.
remarkable. It's remarkable how quickly you end up being the first guy that they dial. It's crazy. They'll start calling, "Hey, let's go get lunch this week. What's going on? Hey, you want to get together?" You start borrowing a couple $1 million. You're in a better position if you borrowed 10 million than if someone that's borrowed 50,000. Like
Oh hell
you're in a
yeah.
way better spot if you borrow 10 million.
Yeah, it's very true.
So, but yeah,
Man, preach.
I love it. Well, look, let's do this, man. I got another call coming up here in like 2 minutes here, but I just
Okay.
want to make sure that we're on the same page, man. Of course, just that you had all the information that you needed, and that you've got my cell, man. So we're gonna be on the same page, kind of moving forward, and just really excited to have you, and just really looking forward to seeing what's next, man.
Man, me too. I'm getting chills just thinking like what's gonna come from, all this education. So just again, thank you so much, man, for sure.
Awesome. Well, again, I'd like to tell everybody, I say, you think where we're doing right now is cool. Just wait to where we are in a year from now. Just wait. Let's just stay in,
Hmm.
keep our nose to the grindstone, and keep on working on it, man. I love it. Sound good?
Understood, man. Hell yeah.
Cool, brother. All right. Well, that sounds good. I'll be looking forward to seeing you on our call tomorrow night. And
Yep.
anything else in between, man, let me know. Okay. Of
For sure, man. Thank you. And yeah,
course.
just have a good one, man. Keep killing it. And I can look
Let's
forward
do
to
it.
tomorrow.
Yeah, man. Sounds good. See you, Martin. Appreciate it.
All right, see ya.